Hey traders, Michael or Mini Frost here. You're here for another episode of Common Sense Market Analysis. Today is Hump Day, July 30th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, guess what? Today is Kabuki Theater Day. You all know how that goes. The Fed decided that there will be no change in the interest rates. They're basically waiting to see how the tariff-schmariff ordeal plays out. It's all about the tariff-schmariffs. That's all what the talking heads on TV are talking about nowadays. A large majority of traders like to believe that the Fed, Kabuki Day, is this whole big deal. They believe that whatever the decision that the Fed is going to make and whatever Jeremy Powell says is going to have a direct correlation with the market. And while in some cases that is true, I tend to believe that the market went to that specific destination, that specific area, because that's where she wanted to go. Not because of the Fed, not because of Powell, because the market decided that's where she wanted to visit. And we'll talk about this later on when we go over inside the numbers. Real quick, let's just go over a few other things. SPY was down 0.13%, down less than a buck, 80 cents. We talked about some important targets on the upside and downside. Upside being a big fat round number at 650. It's important, it's magnetic, it's big and fat, and it's a target on the upside. On the downside, we got some unfinished business. One piece of unfinished business is this gap right here. The gap is at 628.86, and as we see, that the 20-period moving average is creeping up upon current price. So we're not going to be surprised if that's the next destination that Mrs. Market wants to visit. She doesn't like to be too extended from home base. Down below, we have the important trend line that we talked about for a few days now, or weeks I should say. Just from a visual standpoint, we can see the importance of this trend line. Right here, we can see that we touched it on the way down for support once, twice, 3 times, and then we also used it as resistance on the way up. You could see that right here. It's easier to see that in smaller time frames, but I'm not going to waste your time. The moral of the story is that trend line is important. It's down below the 20-period moving average. That is an important destination. Staying above that trend line is the bull case scenario. We have some potential for some great trading opportunities down below. Inside the numbers and live room members will have these numbers on deck. Speaking of trading opportunities, we had a lot of those with the Lazy Swing Trader Automagical Algo system today. We had not one, but 2 profit targets hit for the Lazy Swing Trader members. The first one was PFG, Principal Financial Group. At the time I made this image, she already hit her first profit target, but then later on, towards the end of the day, she did manage to hit her second profit target. So instead of a 4% gain, it's around 5.5 give or take. But anyways, this was a short trade. We got the alert at 80.65, and today she did provide the base hit plus some change. Not to mention, we are running our first ever Lazy Swing Trader promotion. This is the first time MSF has ever had a discount for the Lazy Swing Trader, along with a few extra perks and bonuses. If you've been thinking about trying the Lazy Swing Trader Automagical Algo system, now is the time. This is a limited time offer. It's not going to be here forever. If you want to check it out and read more upon it, the link is in the description below. But that's not all. We had Smuckers, SJM, and she hit her entry target and profit target same day, providing you the risk-free emotionless trade. We nailed it on the frickin' dot. Here's the entry alert at 112.03, spiked it by a few cents, and she did therefore provide you the base hit, risk-free emotionless trade. How are you doing? The Lazy Swing Trader Automagical Algo system. Check it out. This is my favorite part of the video. What do we got for inside the numbers, starting with the 0 dark 30 stuff? Well, let's go ahead and start with today's morning pivot at 635.25. Let's check her out. Right at today's vertical line is today's activity. We got the pivot in green, and as you could see, very early on in the morning, first candle of the day, 5-minute candle, she made a low of 635.29. Came up 4 cents short, came up short again the second time, but then third time's the charm, spiked it by a little bit, and then ripped it right back in the other direction. Okay, so this was kind of a first time, best time situation. Not a whole lot of traders did manage to trade the pivot. If they did the third time around, this was a little bit more of a riskier trade. It's another piece of variable risk. We have the first time, best time rule, but capital BUT, this wasn't the only opportunity that was presented to Inside the Numbers and Live Room members. Let's go ahead and scroll up a little bit at 9 o'clock before the market even opens. On the flip side, 636.20 is an initial overhead resistance place. It's trader's choice if you're looking to short at that level. The more conservative trader will look for a test of 637.75 or higher. This number is going to be important in a second. Bear with me. All right, we got 636.20 on the board, and as you can see, she made a high of 636.23, spiked it by 3 cents, pretty much on the dot. And where did she go down to? You guessed it, the pivot. It's very important that you know your pivots each and every day for the morning session. If you don't, I highly recommend that you figure out a way to know your pivots. Hint, hint, inside the numbers/live room. The market 100% knew of the pivot very early on in the morning and showed the importance of it. Remember how I said that 637.75 was going to be important? Look at this. This is right after the Fed decision when she was whipping them around a bit. This was a target for the more conservative trader. She did manage to come up a little bit short of the number, but this was a target. This was an important number that Mrs. Market knew about. And touching up upon what I said earlier about the Fed is that most people believe that this whole giant move right here was because of the Fed. Now, we're never ever going to understand the true reason of this movement or any movements in the market. Okay, you could come up with 10, 100, 1,000 different reasons as to why the market did whatever she wanted to do. But I believe that the market had a destination that she wanted to go to. She went to it for a reason. It wasn't because of the Fed, okay? It was because the market made a conscious decision that that's the place that she needed to visit, that she wanted to. These numbers are important. They're magnetic. They work for a reason. 637.75 was a number on the upside. She came up a few pennies short, but this was a target. This was the number that we had on the board. This was the target that Mrs. Market needed to visit. Okay, she failed at that number. If the market was in a different position and she had other ideas, she had every single opportunity to go on and blow right past this number, but she didn't. She knew about the number. She found resistance off of the number for a reason. Okay, she's not ready to go push up higher yet, at least right now. So long story short, this whole movement wasn't because of the Fed. It's because that's what Mrs. Market wanted to do. She has a mind of its own. At least that's how I view it in my perspective, and that's how I was taught to look at it. Pause the video, read the notes, and go back to the charts to double check the work. If you're a trader who's struggling to find the pivots early in the morning or just don't have a game plan, this is for you. We have it all laid out on the board early in the morning at 0:30 and intraday updates throughout the day so that you're never missing a beat. On a different note, let's go take a look at Camp IWM. She's down 0.5%, and guess what? She closed below the first line of defense, the 20-period moving average. Now, it's still a little bit too early to say that she wants to move on down for another leg lower, possibly down to this important number that we have at 216. That falls in line with this big breakdown candle high, this recent breakout area. And then if I move the line a little bit, you'll see that the 200-period moving average is right on top of it. So this is definitely an important area on the downside, but we need a little bit more information to see how we treat this 20-period moving average. She can easily come back up tomorrow and close candles above it. Or if we get some follow through, then I start to believe more that we're heading down to this important area. Forgot to mention, the 50 and 200-period moving average can possibly converge as we get down there. That's another piece to the full stack. I say for now, we just keep an eye out for Camp IWM. Something's definitely cooking here. What about the folks in the transportation department? Well, she got taken out behind the woodshed today. She's down 3%, almost 500 smackaroos. She spiked right on through the 200-period moving average, but came up short of the 50-period moving average, which also falls in line with this big breakup candle low. She did give us an early warning sign, canary in the coal mine, when she closed below this 20-period moving average. Now, we didn't know that this was going to be one of those take him out behind the woodshed type of deal. We're not really going to look into the reasons as to why she got taken out behind the woodshed. Probably something with the Fed, tariff, schmariff. I don't really care. It doesn't matter. I look at the charts. I look at the numbers, technical analysis. That's what I truly care about. So here's what else we got for the folks at the transportation department. We have a pretty big area right around 15,200 give or take. You got a breakdown candle high right here. You have a break up candle low. You have the entrance to no man's land right here. It's not a big one, but it is the entrance to no man's land, which generally is a bull bear battle. And then you have this gap down below right here at around 15,100. So you have a lot of key levels of support right here in this zone. I hope you're writing these numbers down on a sticky note. She's now below the 20 period and 200 period moving average, and a stone's throw away from testing the 50 period moving average, which falls in line with this big time breakup candle low. So we'll see what she wants to do. Let's take a look at this from a weekly chart perspective. Okay, she's down below the 50 and 100 period moving average, but notice where she stopped. She stopped right at this big time breakup candle, also falling in line with the high of this breakdown candle. I'm pretty sure we talked about that in yesterday's video or the day before. Whatever it was, this was an important area for the market. She certainly knew about this number, hence the reason why she stopped at this number. There's no accidents or coincidences. What she'll do from this moment forward, we'll find out tomorrow and later on this week, but for now, she's showing a little bit of relative weakness. What about the Q people? Well, she's a little bit of an anomaly today. She's up 0.13%. It's a little bit of a puzzle piece information, still above all the moving averages. Didn't really move much today. Nothing really to talk about in the Qs. She's still creeping up, eating some time off the clock right here, waiting for this 20 period moving average to catch up. We haven't been to the 20 period moving average since June 23rd, so it's been a while, a little bit of an extension from home base. Maybe she'll want to visit it as the week comes to the close. It's kind of a ways away, but nothing really to talk about for the Qs. We'll leave it at that. What about the financials? XLF. She's down 0.19%. She's down 10 cents of the day. Not really a huge big deal for the financials, but what's important to note is that she did spike the 20 period moving average, but she did manage to close back above. That is important. It's a little puzzle piece that we'll put in our back pocket. Staying above all the moving averages, the trend is your friend until she starts to throw your shit out the window. In a bigger time frame perspective, there's nothing wrong with the financials. She's still in a strong uptrend, and as you guys know, if there's nothing wrong with the financials, then there's nothing wrong with the overall structure of the market until something changes. We'll be on the lookout. Last but not least, we got SMH shaking my head, the semiconductors. So what do we got? She's up 1.15%, continuing to make new all-time highs. She was climbing around the 20 period moving average, kept on closing candles above it, gapped up, and now she just keeps on pushing higher. But I want to take a look at the intraday perspective on an hourly time frame and just see what she did. So I mention this all the time, but one of my dad's favorite trades is to spike the low and rip it back up in the other direction. Same rules apply for a spike the high and rip it back down in the other direction. And as you could see, she did that again. She spiked the high and ripped it right back down in the other direction. Right here was a bigger movement, and guess what? Spiked the high, ripped it all the way down, coming up short of this gap right here at 292.99. We'll call it 293. Came up short of the 20 period moving average as well. And that's a front row seat to the trick, trap, fool, and frustrate crew. She likes to screw two factions of traders. People who are short, people who possibly did the spike the high and rip it back down trade, and people looking to exit right at the gap or the 20 period moving average. She came up short, leaving traders in the altar, and then ripped it right back up. So that's a perfect example of why we like to sell into strength, okay? Our order shouldn't have been right at the gap. We put it in front of the gap because they do this all the time. They like to screw two factions of traders. Have I told you guys how much I appreciate each and every one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. We're going to pull the ripcord for today. Don't forget to check out the Lazy Swing Trader promotion that we got going on. We'll be back ready to go in uniform for tomorrow's morning session and the video later that night. Have a great rest of your day, folks, and take care.